Good morning and welcome everybody. It is, what is it, the 17th now? Yep, Friday, May 17th. And what I want to talk about today is Bitcoin. And why do we want to talk about Bitcoin? Well, the reason we want to talk about Bitcoin, there's a lot of reasons. If you're not putting some level of crypto into your portfolio, you're making an enormous mistake. Crypto, I know that some are saying that it is a farce, and then there's others that follow it like a religion. What I do and where I come from is a space of looking for where large footprints, so where institutional money or where strong hands are placing their money, and whether they're in control of supply or whether they would like to be in control of supply and demand. And the reason that we want to be in control of supply and demand of any asset is very simple. It is so that we can control the price, because the price does what? The price controls retail's emotions, the emotion to buy and the emotions to sell. Price is the ultimate driver of emotion. Why do you think that every headline we look at on a day-to-day basis has something to do with price? The Dow hits 40,000 intraday, which doesn't really mean that much. The Dow is up 0.2 of 1% in the last 2 months. In 60 days, it's up 0.2 of 1%, 2/10 of 1%. But that headline is, look at the price. Now, when you start seeing a lot of stuff like that, you need to pay attention. And something that has gone on with Bitcoin, that in all crypto now, that is not really being talked about, is the fact that you can now start to see the footprint of big institutions, the footprint of Wall Street. And it's becoming something that you can now learn to trade for the long term, intermediate term, short term, whatever trading style you have. I tend to focus on long term and intermediate term, helping to avoid large bear markets and large price drawdowns. And how I do that is I identify those large institutional footprints when they're buying and when they're selling, and I simply follow in their activity. That's all I do. And I do that through the lens of what emotional response will this draw from the crowd. Okay. So for any of you that haven't listened to me much before, when I talk about strong hands, institutional money, big money, these are all interchangeable terms. When I talk about retail or the less knowledgeable investors or the herd, who I'm typically talking about is your average investor, the guy that is doing some self-directed trading. He has a 401k, he has an IRA. He might be buying some gold within his IRA. He might be buying a little Bitcoin here, some stocks there, and he picks up on some tips. These are the people I'm talking about when I talk about the herd or less knowledgeable. And the reason their emotions are used against them so well is because the truth is human beings are emotional creatures. We work off of emotion. We buy off of emotion. We sell off of emotion, right? We get excited. We get depressed. We get happy. We get sad. And any good salesperson in any field is always looking to invoke an emotional response from you. He wants to keep you away from logic. When was the last time you went in to buy a car and the car salesman said, now, what I want you to do is think logically. Is this a good rate over a good term? Is the payback worth the payment? No. What can you afford? Let's take that car for a ride. Boy, that car is nice. Do you smell that leather? Listen to that engine roar. Look at the space you have for the family. This is the stuff you hear, not logic. Markets work the same way. And Bitcoin, for the longest time, and still now, really is not in the hands of the many. It is still very much in the hands of the few. There is definitely the ability to control supply and demand there. And with the ability to control supply and demand, you control price. And with price, what you're able to do is manipulate emotions, which makes it really easy for those people in control to profit from the weaker hands, the less knowledgeable hands. And what I'm here to do is I'm here to teach you how to read this book. I'm here to teach you how to read these markets, because what a lot of people are doing, and I see on TradingView right now that the biggest indicators used are relative strength index, Bollinger Bands, and moving averages. Those are the top three indicators being used right now on TradingView software, which is probably the largest community of charting traders in the world, I would say right now. And let me tell you something, those indicators are all useless. They are looking backwards. They are lagging indicators. They only appear to work. If you go back in time on TradingView and you scroll back, and I don't mean keeping the bands in place, you have to eliminate the front part. You'll see where none of this stuff ever works. These are lagging indicators. I'm going to teach you how to read the emotions as they're occurring so that you can come up with a high probability of where the price is going to go. All right, so without further ado here, let's jump in to Bitcoin. Let's take a look. Let's read the story of Bitcoin as it's being laid out right now in front of you live. Let's go ahead and go here. No, you know what? We are going to try this. I'm sorry. I'm getting very used to using this streaming software, and I want to make sure you have the ability to see these charts. And the last time I used it, I didn't. So I'm hoping this time goes much, much better. So here we go. So here we are, and we're looking at Bitcoin. Now, what I want you to notice here is something pretty simple, and that's that you have a ton of trading activity, and trading activity comes in the form of volume. For those of you that that may be new to this or haven't listened to me before, why is trading activity so important? Well, trading activity is the one indicator that indicates strong hands or institutional hands. It creates a big footprint. Okay. Volume creates a footprint that can't be hidden. It can't be. And what you're looking back at here is some really high volume in 2013 through 2021. Now, why is it so high? Well, first off, your price back then was about $150 on Bitcoin and slowly creeped up into 2021, where you're sitting at well, I remember when it popped 20,000. It popped 20,000 2018, 2017. Yeah. And then it pulled back down to 2,000 or so, and then it started running up again. So that's what all of this volume is in here. That's what all of this trading is in here. While important, it doesn't give us a clear picture of what Bitcoin is, because the fact of the matter is that price, some of the pricing back then, especially at 150, 250, $600, $700, $800, the price is so minuscule compared to it where it's trading now at 66,000. This gives us a skewed vision. So what we need to do is we need to go from a monthly chart and we need to zoom in a bit to a weekly chart. We're not going to rush our way, but we are going to zoom in a bit and see if we can't get a slightly better picture. Okay, so let's take it. I think this looks pretty darn good. Let's go ahead. Let's look at it right here. Let's look at it here. So if we were to draw a line right now and say, what is the average volume that we see on this chart? I think it would be fair to say about there. And remember, there's this term used as notional. Notional meaning you don't need to look at this stuff with some lens that you're zoomed in and you're how many thousand shares are in this coin or whatever is being traded beyond the average. Use your eyes, right? Notional. Is it big or is it small? And what I would say is you can find some large areas in here back in 2021, obviously. And you can find a pretty big move here. You can find some pretty big moves down here. Okay. Oh, in fact, let me go ahead and just throw. So this is a pretty big move, I would say. Right. That looks like it has quite a bit of volume. These two areas here look like they have quite a bit of volume. Let's go ahead and get something around. Let's get something around those. Let's go ahead and probably get something. I would say this is well above average. And you'll see as we zoom in that these well above average areas are actually quite bigger than you think compared to what's going on. And I would say probably it looks like we have some above average in here. That's what it looks like to me. Now, when we look at this, what we want to look at is, are prices high or low at these points? I mean, that's really all you want to see, because we're looking at a weekly chart. So I would say prices are low here, right? What prices did is they came from a drop. Prices fell. So these prices are low at this volume. And then I think you can say the same thing here, right? Prices drop. I think you can say the same thing here. It looks like prices have dropped. I think you can say the same thing here. We're still at low prices, folks. I mean, you can see the high prices are way up here at 65,000 back here in November of 21. And this is April of 21. We're at 66,000 down here. You're at 16, 17,000. You are way below. Now, this volume here is a little bit interesting. And I'll tell you why it's a little interesting, because this is working in a reverse manner. This is working right about here. Whoop. This is right about here. So this volume is all of a sudden kicking in at 50,000. So we have a ton of buying down here. I would say at 30,000. It looks like we have a ton of buying down here at 20,000. We have a bunch of buying down here at 16, 17,000. More buying down here at 25,000. So I would say your average buy is probably about 20,000 right here. I would say this is probably your average buy level. If you go ahead and look at these large feet print, your average buy level, let's go ahead and just put it right here. It's probably, 20, 23,000, something like that. Average buy level. Average buy level. Okay. So we can see that our average buyer is probably down there at about 23,000. Let's go ahead and just put a little arrow there. Whoop. Go back. There we go. So that's probably your average buy there. Again, we are just using our eyes here. This is not we are not. Oh, let's get rid of this. Okay, we don't need to go in and look at the exact numbers. And then what we see is another footprint here coming in at 50 some thousand. So you're up about 100% of where we would say, just with our eyes, that the average buy level is. Let's go ahead and erase this. So we see some volume coming in there. Let's zoom in a little more, run a weekly chart. Let's go ahead and get into a daily chart. So we get into a daily chart here. Let's zoom out just a little bit. And what we see is accurate. I would say that, yeah, here you go. I mean, this is where your volume's stepping in. You can see your price up there at 57,000, high of 64,000. Now, for those of you that are new to following me, there is something that you always need to remember, and that is that tops take time. Okay, bottoms come quickly. Distribution. If you are a big institutional buyer of any asset. So forget that we're talking about Bitcoin. If you're one of those religious followers of Bitcoin, I want you to ignore that for a second and just hear what I'm telling you. If you are a buyer of this asset and you control the supply, what happens if you dump supply onto the market and demand stays constant? Prices plummet. That's what happens. You cannot dump supply onto the market unless your goal is to have prices plummet. Okay, so what you have to do is you have to slowly sell your supply onto the market, keeping buyers excited so they keep buying it from you. And what you're doing is you're removing those levels of support that used to exist. You're removing them. And that is exactly why prices tend to fall much faster than they tend to rise. It's because support levels have been pulled by those big institutions, by those strong hands. And as they're giving their supply over to the weaker hands, the less knowledgeable hands, the herd, price will nosedive, okay? If they were to do it too quickly. So they don't. And that is exactly why prices tend to take time at highs before they fall. Let's go ahead and zoom in a little bit more. Let's get an even bigger picture, because we can see real quickly. Everybody, tell me that you can see this footprint right here. I mean, if this isn't as obvious as it comes on this chart, I don't know what is. Let's just put a line here so you can see how far above average volume this particular this volume is. Look at this. Look at that. I would say your average volume, again, just eyeball, just use your eyes. I would say it's probably about here. Look at the size of that footprint, everybody. That thing is a monster. Okay. So what we see here, if we're looking at a daily chart, if we were guessing, we would say that if you were buying at 25,000 and all of a sudden your footprint steps in at 60 and 64,000, and what's the high here? The high here is 69,000, so almost 70,000, and we're seeing this giant footprint up here. It's almost, these are almost all around 70,000, and you're buying at 25,000. We can assume if you're making this large footprint, you're a seller, not a buyer. Now, does that mean you're selling for the long term, that you no longer believe in footprint, that you no longer believe in Bitcoin? I'm sorry. Of course not. Of course you still believe in Bitcoin. But the people that make markets, the people that control markets, they have to make markets have ebb and flows on a daily, weekly, monthly, even hourly basis so that they can stay profitable. That is their product. To stay profitable, they need ebbs and flows of markets. Okay. If your business is Bitcoin and Bitcoin only goes up, that means you've never sold. So you've never made a nickel. How are you going to pay for your staff? How are you going to pay for the mining software and computers? And I don't know how mining works, but I mean, I understand the basics of it, but I don't know all the costs involved. I know energy is a monstrous cost. But how do you pay for these costs without money? The answer is you don't, folks. You have to make money. So this isn't a matter of they believe in Bitcoin, they love Bitcoin, they believe in the future. I'm not saying they don't, but they are going to buy and sell Bitcoin on a minute chart, on an hourly chart, daily chart, weekly chart, and monthly chart, because it's their business. So let's zoom in a little more. Let's go ahead. We'll take it from a daily into what? Let's go 2 hours. We'll go to 2 hours. And 2 hours is going to really zoom in. In fact, we're going to zoom out just a little bit more. We're going to zoom out to a 4-hour chart, because I want you to really see what this high looks like zoomed in, because I want you to just look at it as a standalone kind of situation. So where would you say average volume is on this chart? So where's most of the trading activity? If it were me, I'd probably say about there. Okay. And then what we want to do is we want to take a look at where the high parts of where the biggest feet print. Once again, when you zoom in, the biggest feet print are back here. I mean, the biggest footprints, feet print. I don't even know what the right word is, but let's go ahead. Well, footprints. I was talking about this yesterday. I would say this is the largest footprints back here. And I would say that it is all up in the 70,000 range, which is exactly what we just looked at. But what's going on down here? This looks big. This area here looks like you have a few big areas in here, I would say. Remember, we're always trying to prove ourselves wrong. When you're evaluating, when you're trying to figure out what's going on, don't believe in yourself. The point of this is to say, how can I be wrong? So what we want to look at are these areas in here that seem to be a little high. Where are they coming in? They're coming in at about 60,000. It looks like here. This is probably about the same, 63,000. Where's this one? This one has a high of 65,000. Are they after price drops, or are they at highs? Well, these are still at highs, folks. And the interesting thing is they're not creating any price lift. So sometimes when you're looking at these big feet print, when you start zooming in and you're looking at the feet print, the footprints of large institutions, of big money, of smart money, of whatever you want to call it, what you want to do is you want to say, okay, did that footprint generate a price increase? Because if it did, regardless of the color of the bar, most likely what you're watching there is buying, because it created a price increase. All right. If it creates a price decrease, odds are what you're looking at is selling. If it does nothing, you're probably again looking at selling from big institutions, from knowledgeable money, from big money to the weaker hands, the less knowledgeable hands in the herd, and that's called churning. They're basically selling just enough to keep price where they want it so that they can continue to distribute that supply. If I were looking at this, I would say that even though that, yes, there seem to be a few large footprints, price has gone absolutely nowhere, right? And this is over the last month, folks. This is not small. And price has not increased. In fact, I would say this is churning. This would give me more evidence that what we're looking at in their intermediate term and short term is a price drop, not a price rise. Let's zoom in a bit more. Let's go ahead and get into 1 hour. On Bitcoin, I don't know how far in you need to go, but let's do it anyway. So if you were arguing down here, what you see is a large price gap down, and then the price fills and it does start to rise, right? But as we're rising back into the 66,000, 68,000 area, what do we see yet again? What do we see? That's where your volume is, folks. That's where your trading activity is. If you were in control of supply and your job is to profit on a daily, weekly, and monthly basis, would you be buying at these prices? You wouldn't be, would you? You wouldn't be. Now, I'm going to leave it off at that. I'm just going to pose that question to you as I go. Is if this were you, would you buy at those prices? If you were buying at 25,000, would you be a buyer at $67,000? I'll go ahead and answer that for you, and the answer is no. I mean, of course, you're not a buyer there. You're just not a buyer there. That's not realistic. And so let me explain the system that I run here. My name is Derek Miller. For all of you, my company is called Promethean Investing. I call it Promethean because it took me 25 years in front of a computer for 60 to 80 hours a week to learn how to read this stuff and to learn how to do this. That makes me an expert. I see things that you will not be able to see even if you start today and you start 60 to 80 hours a week at my profession. 5 years from now, you will not see what I see. It's not that you're not competent or capable. It's that I have a lot more time into this, and I've become an intuitive reader. Once you become a master at something, the mechanics matter, but you can see things that others can't see. And that's the level that I've attained over 25 years of being a professional at this. How can I call myself a professional? Well, I worked for the largest brokerage firms in the world for 17 years. I've been professionally trading for a little over 2 decades. I would say it took me 10 years just to become decent at this. Decent. 10 years at 60 to 80 hours a week. I run a system that allows you, the people that we talk about, retail investors, self-directed, the herd, less knowledgeable. I'm trying to share the knowledge with you. And I'm also sharing the knowledge with professionals that really don't have a vested interest in learning this to the depth that I have. If you're managing money, if you're a wealth manager, the odds are you don't have the time to do what I do because you are out there keeping financial plans in place, contacting your clients, talking about the markets, keeping emotions under control, this sort of thing. This is where I come in because I add another layer of knowledge to what you're doing. I have a 3-part system. Starts with a financial plan. Look, if you have a financial plan, and most of you don't have a financial plan, let's be honest, you need to set some goals. And when you set goals, you know how to meet those goals. So you're going to set up how much you should save, when you should save, how much you should invest in the general manner in which you should invest for the long term. How much risk do you need to take to get where you want to go? This will help guide you. The next part is my 6-week VIP mentorship course. I call it a course, but the truth is, I am teaching you risk management, cash management, and investment management. By the time those 6 weeks are over, you will have an investment plan based on cash management, risk management, and investment management, but based on you as a person. I'm going to help you design this plan over our coursework over 6 weeks so that when you come out, you will have a disciplined, structured plan. The third and final piece is you subscribe to my newsletter. You get a bi-weekly video update and written update as to what's going on in the market and exactly what I'm doing in the 3 portfolios that I run. This will further your education. This will also allow you to see through my lens, through the lens of someone that's been doing this for over 2 decades, 60 to 80 hours a week. I will talk to you about the emotional behavior that's going on, how to identify where the footprints are, what they're most likely doing, and how that can help you. If that interests you, for those of you that are watching me live right now, you can see my QR code at the bottom. If it interests you, listen, I'm not a salesman. I'm not going to come after you trying to sell you. If you're interested, leave a comment, shoot me a direct message. I will answer your questions. If you're interested, great. If you're not, that's fine as well. This is not a pressure situation. I am trying to share with you what has taken me 2 decades to learn and what has gotten me, and again, historical results are no indicator of future results, but I can tell you this: they've gotten me positive returns year over year over year. They've helped me avoid, and my students and my clients avoid, the largest bear markets in history. All right. I don't want to go on talking about my performance, because what I see when I see someone doing that is someone either trying to gloat or they're full of shit. And I'm neither of those two things. My process works. Once you go through this process with me, you'll know that it works. I won't have to convince you of a thing. Once you are subscribed to the newsletter each week, you will have a disciplined structure investment plan that you're going to follow. You'll make the adjustments because you'll understand what you're doing. Thank you so much for watching. And as always, any of you that are struggling with mental health today, any of you that are struggling to see the positive in the world, any of you that are struggling to see the light, listen, open your eyes, go outside, look up, right? Listen to some music, draw a picture. It sounds silly. Write a poem. Maybe that's not your thing. Sometimes it helps. Read some Bukowski, right? I know it sounds crazy, but sometimes that's the most uplifting thing I can do, because I realize that others can view things the way I can view them sometimes. So again, if you're not interested in my system, in the process that I do, but you love information like this, please support me. There's a QR code right there at the top left hand of your screen. Click it. Support me, help me keep this going. Otherwise, for those of you that are interested, I can't wait. I have a mentorship course starting in 2 weeks here. Actually, it's less than 2 weeks at this point. So if you're interested, you should contact me very, very soon. Thank you so much for watching. Have a great and blessed Friday, and I will see you tomorrow.